This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
Boom! What is up, everyone? Welcome, everyone who's joining us from the List Makers event. We're just doing a quick show today, 30 minutes. I'm going to bring on my guy, Nick Chahine, here in a few minutes. We're going to be doing some option trading. I've been doing some of my own option trading today. We can get to that. But first things first, here's what I wanted to talk about. Everyone and their mom out there seems to be bearish, seems to be talking about how bad inflation is. And I'm not saying I'm not buying it, but look, this right now, that's the media's narrative. They're sticking to it, but we're starting to get some data out showing, I'm going to pull it up on the screen here in a second, showing that maybe some of these supply chain issues are starting to alleviate. Some prices are falling for some producers. And I just don't think that it should be a given thing that we go to 2% interest rates, right? The old idiom was always that the Fed's job is to take the punch bowl away from the party just as it's getting started. I'm saying we haven't, the stock market's been doing really, really well. But as far as the overall economy, I don't think we've even started partying yet. Our unemployment is still not back to pre-COVID levels. Let's at least get there. Let's at least get back to baseline before we start talking about raising rates too much. And here's the other thing with raising rates and inflation. And again, this is not something that people are talking about out on mainstream media. You have certain things driving price, certain things driving inflation more than others, right? Used cars, new cars, energy. Raising interest rates will slow down investments into these industries. We need more investments in there right now. We need more investments in the semiconductor industry to get more cars out there. That's what's going to drive prices lower, is investing in these places that we have bottlenecks at the supply. So I'm just in the camp that I think we should wait and see. And everyone's saying, oh, the 10-year yield inversed with the 2-year yield, recession inbound. I'm just saying, let's wait and see. I think the Fed should be nimble on their feet, wait and react instead of just saying, hey, we're gonna raise rates to 5%. You know, they're talking about 7 rate hikes. I don't want that. Let's see what Nick Chahine has to say. Let's give him our special intro. Nick Chahine, how's it going?
Good. You don't want to hear me say what I want to say. No, but I totally.
No, I want to embrace the debate, right? If you think the Fed should raise rates to 2.5% by the end of 2022, no. Everyone's entitled to their opinion.
So here's my thought. You said the first part that everybody's so bearish. Even when we were bumping against the lows from 224, my message to my team is that I still think we should make new highs this year. And we came within 3% of the all-time closing high or something like that on the S&P. So clearly we can still do that, but everybody's still looking lower. We had a death cross here and this and that. So to me, it's very simple. Every company I read is doing better than it's ever done before. So clearly we do have inflation, but it was by design. The stinking Fed designed it. They threw trillions of dollars and the White House. It needs time to burn off. So the fact that we have inflation, it's by design. They told us transitory, almost in a like, you don't know, it's transitory. And now suddenly they're panicking. So what they're going to do, they're going to kill the patient on his way out from the hospital. They just fixed the economy. Now they want to kill it? No, I think they're trying to just slow it down. Unfortunately, they will overshoot, just like they overshot trying to reflate it. So unemployment is at record lows, basically. It's at full employment. And technically, everybody that wants a job has a job. So there's no unemployment issue. So it's not like stagflation. Growth, I think GDP today was in line, 7% or whatever it was. So there isn't a problem with growth. So GDP is there. So there's no problem. Macroeconomic conditions are healthy. Therefore, if you turn off all the news, do you think people will be buying or selling stocks? Just people would be buying stocks. They wouldn't be selling stocks because the
I
P&Ls
agree.
are, the
I mean, look,
P&Ls the
I was just gonna
P&Ls
say
are
we
improving. Everything is getting better from the business perspective. Okay, we're paying more for stuff, but that's by design. Stop paying more for stuff. So I complain about the price of milk, but I still buy it.
right. And I just want to clarify something. I'm talking about because I saw someone in the chat say everyone's not bearish. The put to call ratio is more heavy on the call side now. A couple weeks ago, everyone was,
That's not an
recession.
indication of bullishness, by the way, or bearishness.
Well, and without.
Okay, I can argue this to death, and people will say, "Oh, you don't know anything about it." A heavy call position is bearish to the stock price because if you assume that market makers actually sell the market, then price will have to struggle and beat the market makers in order to rise above that call position. So I can argue the other side of it. Every call has been bought and sold. Who's smarter, the seller or the buyer?
Yeah, I was just going to say, so in that scenario, simplified, you're just saying that you're willing to bet on the seller making the right call by selling this big order of say 190.
Sellers are smarter than the buyers because they are actually making the market. If they're not selling anything, there's no market. So I've
never thought about it that way, but it makes so much sense that if a big seller sells a bunch of $190 Apple calls that expire next Friday.
Yeah, and don't they say most options expire worthless? So what does price have to do to beat that most options position that's on there hanging? So if you use the information correctly, you can make money off of that, but don't make it drive your decision. So we just took a position. I'm actively trading something right now. And by the way, these windows, the windows I'm looking at, I'm sharing it live to 240 people in my room right now. They're watching my screens and they're wondering why they can't hear me because I muted myself to them. And that's what we're doing. We're trading actively. Believe it or not, we traded AMC this morning. Somebody popped in and said, AMC is moving. So we looked at it and there were a couple of harmonic setups and they were perfect. First thing in the morning, woof. So we scalped. I didn't because I can't do it and organize everybody, but they scalped it. It was perfect. So you're either completely tactical intraday or very tactical swing trader. But to make big decisions, I'm investing for the long term, you have to take into account other stuff. For example, Chewy today falling 15%, right? Or 14, whatever it was. So I like it. I want to catch the falling knife. I shared a trade for that, but I gave a caveat, a giant caveat. I said, I'm not sure I'm going to do it for myself today, but this is what it would look like if I did it today. But the problem is the S&P ran 2 weeks with one red tick. This is the second one, 12% rally. So I think there's a 4% dip built into the SPY soon, and it would be a reason to buy. So somewhere around the 436, 438, 440 maybe, I would be looking to buy the dip if it happens. So I said, if that happens, that's going to put pressure on Chewy through no fault of its own. So even though Chewy has support, this may not be the first and only red tick this week. So yes, you want to get long Chewy on a dip. That's a good idea, but choose something that doesn't require a rally. So if
Nick, do you mind just sharing your screen real quick?
I don't mind. I didn't want to impose, but yeah, I don't mind. Share screen. So I do have, hopefully I can share window because I bought a new monitor and it's 49 inches. So, you
should be able to.
Yeah, I got it. Okay. So you guys are seeing it, right? So this is the Chewy setup. So you options traders always look to buy calls.
So we're looking at Chewy right now?
Yeah, we're looking at Chewy, and this is a snapshot from earlier. So instead of buying calls, so we're looking at 2 time frames. This here is April 14th, so that's the monthly expiration, and then the one below it is 1 week later, the 22nd. So instead of buying calls and hoping for the best that it's going to rally off of this dip from Chewy, this is a simple one-day chart. So it's falling into support, good base, proven base. If you lose it, you're going much slower, so you stop out on that one. But instead of saying, okay, I think it's going to bounce, I'd rather say, let me sell some risk to somebody who's panicking today, freaking out. So I would sell a put if I wanted to own shares. If I don't want to own shares, I would sell a put spread. Create income. So that's a bullish position that does not require money out of pocket. In fact, you collect money for opening it, and then you wait. What do you need to win? Nothing. You just need time to pass, and you need price to be at or above the leg you sold at day of expiration, and then you win. So not only it doesn't need a rally to win, it can allow for another 13% dip before you start losing money actually. So, and if I sold it and then price falls through it, personally, I would take shares. I wouldn't defend the trade. I wouldn't take a loss. I would just said, okay, I sold you a put, give me your shares. This way, I collect the money, I keep it, and then all I have to do is just buy the shares, and I'm good. And that's a pretty decent price for Chewy. Why? Because it's growing cats and dogs. Now, they did kind of tepid growth going forward, but that's them probably doing some under promise and over deliver situation. So for now, there's no alarm on Chewy growth. It's still growing a lot. So that's just one idea. You can't go all in anything because nothing has changed since the rally started. We have the war in Ukraine did not improve. In fact, it probably got worse. We have let's see, the Fed is waging war on inflation, price stability, now they call it. Apparently, it's not transitory after all. And now the new thing is the resurgence of lockdowns. I'm not so much worried about the actual virus numbers, although that's a personal worry, like safety personal worry. But from a stock perspective, it's the lockdowns that actually kills the businesses. And in China, they are locking down. I doubt the US will lock down because we just can't afford it. We literally can't afford it. They blew, they emptied the coffers, the White House, for battling the first wave. They cannot spend trillions to reflate the economy again. So that's the big picture. I'm optimistic looking at each company. Tesla's numbers, like, wow, right? Amazon, it's just unbelievable. Good companies making record sales. And they're improving everything. And then you weigh it against all the worries and all the media coverage. Oh, this and that, and death cross this and this and that. And whenever this happens. It's like, there's nothing normal about this year. Therefore, you can't apply any seasonality or anything like, oh, usually like you mentioned the inversion of the yield curve.
Right, and that's part of the reason why I said everyone seems, and I know a lot of sentiment has shifted because we've seen the SPY's up like 10% over the last 3 weeks, right? We've seen a lot of sentiment shift more toward the bullish side. But once this inversion happened, I don't know if maybe it's just me, but I get on Twitter and every other tweet is about, oh my God, these things just inverted. We're going to a recession, sell everything. And it's just like, we just came out of it. We just came out of a global pandemic.
Yeah.
There's increased inflation right now, not just in the US, but around the world, which puts not just the Fed in this position of trying to balance between not going too hard that it stipends the economy and also battling inflation, but all central banks around that world in a similar position. Of course, things are going to be a little weird right now in terms of bond rates and inversions and stuff. To say that we're for sure heading to a recession because of this is just blasphemous to me. You have nothing to back that up. You have nothing to back that up. Because in the same way that you can say, oh, look at what happened. And by the way, Nick, just real quick, because I do want to get to these charts. When the people that are talking about the inversion like this, if you look at it, the actual recession didn't start till like 18 months to 2 years after it was like the average time after.
So the idea behind it, this inversion thing, by the way, I'm long the TLT. So, which goes against everything everybody else is saying, right? I said, I'm fighting the tape because it was falling. I'm fighting the Fed because they're raising rates. And I'm fighting the common sense. I'm long the TLT on a technical basis. And today, look at it. It flipped from red to green. So, but the reason why the yield curve inversion is important because the concept is banks are the ones that feed the global growth, right? If you want to open a business, you go to a bank, you borrow money. Well, the bank is going to is not going to lend you money if it costs them more to borrow short term and lend long term, because they borrow short term and they lend us long term. The spread makes them money. Well, if the yield curve inverts, that means the short-term yields are higher. That the inversion they're talking about was a 2-year bond over the 10-year bond. For minutes, it was paying more, literally minutes. So I saw the headline. The headline grabbed my attention. It said, yield curve invert. And I go in there and said, only for minutes. And maybe this time it's different. Like, so now somebody reads the headline, oh my God, the yield curve inverted. Then they tell it to you, they tell it to that. It's just the yield curve inverted. So yeah, and that slows down growth down the line. But I say, take all the rules that you know about economies and throw it down the trash for now, because A, the data's garbage, and B, this is not a normal situation. We have trillions of dollars circulating in the economy, trillions. That is such a huge number, it's not even fathomable. You know that if you spend $1 million a day, forgive me if I repeated it on your show before, if you spent $1 million a day, it would take you 2,740 years to burn through $1 trillion. And we have like 7, 10, I don't know how many, 5, whatever. That's a lot of years to burn off. Record reserve.
That's 1/3 of an apple.
Yeah, but when we have record reserves, so people have jobs, have money, have extra money, are spending like fools, and they're not complaining about anything. My son builds cars for a living, so he's actually a fabricator, welds them, puts them together, builds motors and sells them. And he flipped a couple of cars in a matter of a month or two. I'll give you an example. His last biggest flip was he bought a Corvette, a 2010 Corvette, did very minimal things to it, sold it for 32 in under a month. He bought it for 20.
Wait, so he's not working as a assembler for like a big company? He's
no.
He's getting kits?
He's 20. He's been fabricating since he was 15.
Does he buy kits?
No. If you give him a Silverado, that's a 2000 Silverado, he will chop it up and rebuild it from scratch and make it like a trophy truck where you can take onto the desert and drive a long travel.
That's incredible. That's awesome.
So he flipped the Corvette. He just bought a Corvette for himself and was like, no, don't buy a Corvette. 2010, flipped it for 32 in under a month. He didn't do much to it. He invested $400 or $500 in some sweat equity, but that's the kind of market there is. There's so much money out there, and people are willing to spend. So inflation, yes. When it crimps spending, I worry. Spending is at record levels. That's the problem. My mother lives in Lebanon, and there is inflation, and there's crimping spending. Nobody can buy anything. You can't even buy gas to go to work, so you quit your job. That's debilitating inflation. This inflation we have here is just an annoyance.
Well, and going back to the to the yield curve inversion, what's so funny is like of hand picking metrics like that to fit your narrative, whether it's, oh, we're going to have a recession, things are so bad, look at this inversion. There is so much data out there, even coming out of the last 2 weeks, right? If you look at the last times the SPY finished up more than 1%, 6 out of 8 trading days. The return after that happening was positive like 20% on average over the year after that. And we just had that happen for the first time since during the crazy COVID markets.
Yeah.
So it's like just you can handpick bullish metrics too that say, oh, look how good the stock market's going to be.
That's why I say, you've known me, ignore the news. I don't watch any news. I swear to God, I don't watch news. So I'll show you what we did today. So how can you ignore the news? You pour into facts. Facts. What's a fact? These are facts. These dots on the screen are facts. So this is the SPY 1-minute chart today. These lines, look, I don't have any tools on this chart. These lines are hand drawn from the open. Somebody said, what about the SPY? So I said, it was here. First thing in the morning, 7:30. So now we're into the open. I said, maybe we do this. I drew this red line. Okay. This is what I drew live. I swear to God, I have 240 people that witnessed. And then somewhere up here, I said, okay, so now maybe they're drawing a shorter term head and shoulders. So I drew the white line. I said, so now we have a head and shoulders that could trigger another head and shoulders that could trigger another head and shoulders, which is that yellow one here. So this was early this morning, right? So then this happened, and look how, they overshot. But here's what the point I'm making. Look at where they stopped on the way up twice. That was my white line from first thing in the morning. So what am I saying? I'm saying ignore the news, use the data that's in the chart, because those are facts. Use logic to trade that with some, like Chewy. The logic is good company growing, falling on blah, blah, blah. I can catch it and then use the data in the chart to make your logic fundamentally based trade bulletproof, right? So like right now, before I got onto the show, I said, I'm shorting the SPY with a lottery ticket for today. And it's basically banking on this failing, and we go to 456 today. So that's quite a bit, right? 456. That would fill this one and then some. And so, but that's a lot.
Aesop's in the chat was wondering if you're holding SPY puts right now.
Okay, so I'm showing them this because yes, I am holding them, but they only cost me 15 cents or so. So I'm not risking the house, but that would be like a 4-bagger if it goes there, if not more. No, not many people are expecting it. I looked at the options chain and it doesn't look that easy, but it is possible. And if I look at it from the SPX perspective, losing this in the SPX could give you that target, which would fill the gap. So the SPX is like a cleaner look of the SPY. So I think it's doable. So I measured, okay, what's the drop from here to here is like 0.6%. And I was like, okay, so let's extrapolate 0.6% drop on the SPY. And I got to 456. So I bought a put in between here and 456. It didn't cost much and it expires today.
Do you remember the exact strike? Someone's just asking in the chat for the specifics of the trade.
You can buy the 457 put, pay a little bit extra for better odds, or a 456 put for a debacle. The 457 put, last I checked, was 20 some cents. I don't know what it is. That would have better odds. But these are lottery tickets. So I don't do this for practice. I'm just betting on something that not everybody's watching right now. Okay, we're down 1%. Well, it could get a lot worse. I think the S&P should drop 4% from yesterday's high. So it should come back down to 438. And it would be normal price action. I'm not like being bearish. Check it
Nick,
out.
can you?
So can I do what? Say it.
I was going to ask you to do me a favor. I wanted to have you look at this chart because this is not a stock that I would typically be interested in, right? I like stocks that move a lot. I like stocks that are exciting to me. But 3M, the chart's been looking interesting for me. And I just entered a swing trade on it.
Yeah.
And I'm curious if you've looked at the chart recently or if you mind pulling it up and looking at it.
I have looked at it because somebody said they wanted to buy Chevron for dividend income. I said, why not 3M?
Maybe that's where I got the idea from, because that's I was like, hey, I don't really have any dividend stocks that I actually like.
Right.
Like I consider my biggest dividend stock is Apple.
Right. No, I would do this one. I would do, AT&T, a little riskier, but the AT&T pays 9%. And it's at generational low, but it's kind of a broken business. So they're trying to rebuild it. But hey, it happened to GE. GE rebuilt itself. So 3M just fell apart here. It has a gap. So you can imagine that it's going to be a slog going up. But if you own shares and you're getting paid a little bit to sit on them, so 4% is not huge, but it's better than nothing. And it has solid support. So for 3M to fall from here, it would mean the stock market is in trouble altogether. Let me look at the weekly. Yeah, I like it. I like it. If you have a slightly longer horizon, that also works. If you do options, I would confidently sell puts until I get put to shares. And if not, I made money. That's dividends every day, every week. So if you're willing to own shares, you can sell a put and sell it again and sell it again and sell it again until they give you the shares. And then you own shares. Meanwhile, you made money until you own shares. I have a cousin that does that. He's a PhD in genetics engineering, quit his job and does this.
Wow.
In stocks he likes. This would be one he would like. I remember he used to do it in Cypress. Is Cypress still a company all by itself?
I don't know. I don't hear anything about the stock. But yeah, I mean, with a company like 3M, that is a very interesting strategy because the 3M's a little bit actually not a little bit. It's a lot of bit safer than some stocks out there than your any growth stock you name, right? 3M is a value stock. It's
value stock, 15
defensive.
PE. Yeah, 15 PE. It still grows a little bit. It's profitable. And here's the metric you guys need to get used to. When you're looking at, I'll give you an example. So I was debating between DraftKings and Penn. Similar stocks, similar fundamentals, like environment. Interesting. Yeah, get out anywhere near here. So DraftKings. So I was like, okay, which one? They're very similar. Which one do I? They both have a huge rally coming. Both of them, Penn and DraftKings. So then I looked at the financials, and that's where they diverge completely. And I'll tell you, the deal killer for DraftKings for me, it bleeds operating income. So it has to borrow to exist. Okay, look at the number. If this is correct, operating income $500 million in red, right? So rising rates, borrowing is going to be more difficult. So that crimps their executions. So they may not be as aggressive going forward. Compare it to Penn, which has better fundamentals, and they're positive on the cash flow from operations. So they're not bleeding. They're not super positive, but they're positive nonetheless. So and they're positive, and they create a net income situation, not super big, but still a net income. So oh wait, wrong one. I thought the numbers were pretty low, but trust me, I looked at it and that was that way. Similar scenario, by the way. There, $1 billion in cash from operations. So I would take that over DraftKings. It may be a little bit more boring, but quote safer, because their operations runs itself. So that was the deal, the game changer for Tesla. Tesla now, last year, 2 years ago, was $6 billion. Last year was $12 billion almost in cash from operations. That company is incredible. I don't like this diluting to split. What's up with that? Oh yeah, we're going to split the shares. Oh, but first we're going to dilute it in order to split it. It's like cutting hair in order to grow it. It's not a selling point for me. The splitting thing is just noise in the news, and it's totally tradable, which, by the way, there was a couple of minutes ago, Tesla, somebody poked it. Look at these 2 minutes. Boop, boop. And look where it died.
I don't. Wait, we're looking at Tesla right now?
Yeah.
On what are the candles? Is this an
1
intraday?
minute. Just like before I got to the show, this happened. 2 minutes. It went from 1,003 to 1,013, 10 points in 2 minutes. And then it died here. So this is where FOMO goes in. Oh, look left. Just look left before you buy it.
Do you mind pulling up a daily? Do you mind pulling up daily on Tesla?
Yeah, we can pull up a daily.
I mean, this thing it's got to come down at some point, right?
Right, but you don't short it based on that. So here's what you do. If you say it has to come down and you want to gently fade the rally, otherwise people will hate you for saying, I'm shorting Tesla. More.
I did. I bought puts last night. I lost.
Right. So why not put spreads, first of all? And if you bought them, make sure to put a stop. That's the step where people forget. And I'm not saying put it mechanically. Make sure you stay on top of it. Don't let it get away from you. Like if you invested $500, I'm just making up numbers. You say to yourself, I'm willing to lose 100 of that. And then stick to your guns. Stop out regardless what happens at 100. Or if you say, okay, so if it takes out the high that I thought would be a top, then I'm wrong, right? If you shorted it because it was so high at that level, if it makes a new high this week, get out because you clearly were wrong. So I'm going to share that same picture on the SPY to show you a visual, of what's going on. So this is the SPY daily, no lines from me. This harmonic thing here, forget about it. That island candle, the SPY island as I call it, and then this is not a good base for anything. So even if I'm bullish, which I am, I don't want a rally from here. It just goes against everything correct on the charts. Like, look at these two islands right here. That's garbage price action. So you leave a gap behind, you leave weakness. Like, look at this, pop, they came back and closed it and rallied, fine. Right here, they hesitated, that's a big doji. That's a good place to get started. So I think there's going to be support at 444. Let it come down. Then the rally would be so much bigger and better. If this fades and then takes out the high from yesterday, we will make all-time highs. I guarantee it. I guarantee it. With two stops, 472 and the high. And then we can go to 488. Not many people will tell you that. Just let it dip. And then you draw an inverse head and shoulders. The upside potential of it would be 40 points from here. So 500.
Well, you said, Nick, a lot of people won't tell you that. A lot of people won't tell you everything you're telling us because not a lot of people have the knowledge that you have. And if you want more from Nick Chahine, you can catch him in the Benzinga Inner Options Trading on Benzinga Pro. I know I hang out in that chat. Link is in the description. Nick, always a pleasure to have you on. Unfortunately, we are running up.
I understand. I know you guys are pressed for time. I appreciate the time.
Today, a bridge show. We'll get you back on. Is it next week or the following week?
Yeah, maybe I'll come on, maybe I won't. I don't know. Just talk to me. No, just kidding.
All right.
Of course, later.
Peace. All right, guys. That's Nick Chahine. Like I said, hit the link in the description to get more from Nick Chahine. You can get on the Benzinga inner options all day. Nick Chahine is in the Benzinga Pro chat. If you're looking at different option contracts and you want to ask Nick, hey, what do you think about these Apple 180 calls? Nick is there to help you. He's not going to necessarily tell you what and what not to buy, but he'll definitely give you some ideas. But real quick, guys. Spencer sent me something on Slack. I just want to pull it up because it corroborates my argument I was making earlier, just that I don't think it's worth freaking out about this yield inversion right now. This actually came out. Look, I'll give you a zoom in on Twitter. This came out 1:37 p.m. Check the timestamp. He was listening, Ryan Dietrich from LPL was listening to my monologue. He said, looking at the previous 4 times, the 2 and 10-year yield curve inverted shows the S&P 500 rallied for another 17 months and gained 28.8%. So shouldn't that be right? The headline, if you are going to talk about the inversion, that we saw a 30% rally. So either way, guys, just beware of all the narratives that you're seeing out there because hey, I can find all these metrics that say we're going to a recession. I can find all these metrics that say we're going to be bullish. It's just what stats you can find that fit your narrative. I'm in the camp of saying, I don't know. We don't know. So I'm going to wait and see. And I just hope the Fed embraces that kind of open-mindedness as opposed to strictly holding, which it looks like they're going to do. Powell has already said repeatedly that they are going to wait and see. And then just real quick, because we do have to wrap up here, I'm going to pull up. So this is a thread from a good friend of the program, Joe Weisenthal over from Bloomberg. Let me go ahead and share this. So Joe Weisenthal has a daily newsletter. I recommend it. I don't know if you need a Bloomberg subscription. But essentially, let's look here. He's talking about the bullwhip effect. So, right, we saw bottleneck, supply chain issues, inventory was low, demand was high, and all these suppliers come and rush in to try to fill that void. Because, I mean, think about it. If you produce bundles of wheat and the price of wheat skyrockets because the supply is dwindling, you want to go rush out and produce as much wheat as possible because the price is high. And what does that do? You get a bullwhip effect on the other side. So as you can see here, this is a chart of winter inventories, 2019 to 2022. Inventories are looking good for the first time in a while, right? Abnormally high inventory metrics. This is coming from the December Logistics Manager Index report. So I don't know. I'm just saying, I think it's easy to get caught up in the mainstream media narrative saying, oh my God, we're heading to a recession. Inflation's going out of control. I'm just saying, I think the Fed, see if some of these inflationary problems are going to alleviate in the free market, because that's what this is. It's the free market. It's supply and demand. No, you do not need a safety hat to read this. Again, shout out Ryan Dietrich again. I mean, this guy from LPL always putting out great data, great follow on Twitter. I'll drop him there. All right, guys. That's going to be a wrap for us today. Thank you, as always, to all who have joined us. Please subscribe to the channel and give us a like if you have not already. We are going to be talking about ApeCoin on our next show. Coming up, the roadmap, so stick around. Actually, hold on. Before we leave, let's see if we've got any. Jay Rice, I don't know. I could go on Twitter and search for the word recession and see how many tweets you have about people tweeting about recessions after we've seen Apple stock up 11 days in a row, which hasn't happened in, I don't know, decades. Yeah, I'll play some Village, people. Smash my line. Throw a 1 in the chat if you think we should do a Benzinga Twitch channel where I play some video games, talk about stocks. Thank you guys. Smash the like. Love you guys. Yeah, ELE. Everyone love everyone. PVO, positive vibes only. I'm seeing one in the chat. Oh, I'm seeing a couple ones in the chat. There we go. All right, Aaron Thomas. If people want a Twitch account, they want to watch me play. What should I play? That'll be the first thing. We'll vote on what game I start with. I was thinking Rocket League. Do the YMCA on Twitch or right now? If we get to 100 likes. What do you guys think this week? Tesla closed and the delivery numbers are due short. Dude, I don't know. I'm done with Tesla. Either buy the stock or sit on the sideline. Don't short it. I'm speaking from personal experience. No, I'm just kidding. Actually, I want to mention that earlier because I said I bought some Tesla puts yesterday. I did. I lost money on them, but I'm a Tesla shareholder. So I'm of the camp where if I buy some puts and it goes down, I make some money, great. In the long term, I still own Tesla stock. If I lose some money, oh well, I own Tesla stock. So I still made some money. I don't know. Anything but Fortnite. I've heard Fortnite's black. Oh my God. I've heard Fortnite's back. I was reading your name, Black Mage, while saying Fortnite's back. They took out building in Fortnite, or at least you can play a game mode with no building. So all these people that can't build have been playing Fortnite again because they finally have a chance to win some games. Double down on XLE. Yeah, I mean, Kutan, shout out. That's a great trade. You bought some Tesla calls this morning on the reversal, sold them for a profit. That's all you can do. You can't go broke taking profits. Take all the profits you can. All right, guys. We're heading to the roadmap. Love you guys. We'll be back tomorrow, 11:30 a.m. Eastern. If you guys want to see a really weird show, Spencer's going to be gone all Friday. So all Friday, we're going to do a full-length show from 11:30 to 2, and it's just going to be me wreaking havoc. I'm going to be bringing guests on. I'm going to be able to do whatever I want because Spencer's not going to be there. Maybe I'll shotgun a beer on Friday's show if we get a certain amount of likes. Spencer is coming over here probably to tell me to wrap up the show, so I'm going to do it before he gets over here. Bye, guys. Love you.
No,
do whatever
you want.
Oh, my God.
Do not do whatever you want.
Why?
We have rules of
Is one of the rules that I can't wear two hats?
No, do not encourage this, people. Do not encourage this. I'll be back on. Oh, my mic is muted. My mic is muted. Do not encourage this. We have rules of decorum. Okay, keep the train running on the tracks. That's all I ask of you. By the way, I'll be here tomorrow.
I said if you want to do a weird show, come on Friday.
Today's Wednesday. I'll be here tomorrow.
Okay. I never said you weren't going to be here tomorrow.
Okay.
I was given Friday.
Okay.
A preview. Oh, that'd be kind of funny if I just Ferris Bueller'd the show.
What is that?
Opening day.
What does that mean?
I don't know. Play hooky, I guess.
Wait, yeah. What does Ferris Bueller the show mean? We have to go, man. The roadmap is live.
Wait. Someone just dropped a great idea in the chat. Every sub we get during the show, I got a shotgun and beer. That could end very badly.
Okay, the roadmap, are they live? Can we wrap this up?
Yep.
All right.
Love you guys.
See you tomorrow.
Peace.